So last time around, we were talking about asset classes, but this time, help me better understand which ones are halal and which ones aren't.
So let's start with the basics. So stocks or ETFs can be halal as long as they operate in a permissible industry. So as long as they're not involved in, alcohol, gambling, interest-based finance, or weaponry, then they're good to go.
So it's not just about the stock, it's about what the company does as a whole, right?
Exactly. And, bonds, for example, those are haram or those are off limits. Instead, we use sukuks, which they are an alternative to bonds, and they operate in a way or they're structured in a way where your profits are coming from real assets instead of coming from any lending that's occurring.
What about gold and real estate?
So typically, generally, yes, as long as it's not tied to speculation or interest. And then also ETFs as well. They're good to go as long as it's tied or it follows a Sharia compliant index.
Because in an ETF, you would have to check every single company in that fund, which would take an enormous amount of time.
Exactly. But here at Wahid Invest, we have our Shariah Review Board to ensure that everything is clean and compliant.
Okay. So it's about what the company does as a whole.
Exactly. And for example, bonds are off limits because they rely on riba or interest, which is absolutely prohibited in Islam. So as an alternative, we use sukuks, which they generate their profits in a halal way from real assets, not from lending money.
Invest with peace of mind. Download the Wahid app and start building your halal portfolio today.